Williams, who has our news headlines right now. Hi, Ethan.
Hi, Leisha. Well, a stabbing in Saskatoon has sent 3 people to hospital. It happened this morning on 20th Street near St. Mary's Church. Police say a woman approached a man and a woman on the street. She tried to rob them at knife point, but the intended victims were also armed. Police say none of those injuries are life-threatening. We'll have more on that during our next newscast at 1 o'clock. And also, Premier Scott Moe says he's not worried about a potential audit from the Canada Revenue Agency. Prime Minister Justin Trudeau said recently the CRA will find a way to collect money owed by the province after its decision to not remit the carbon tax on home heating. But Moe says he doesn't believe the province will have to pay the money because federal laws need to be changed first. This, of course, Leisha, as you mentioned, the tax deadline looms today.
It does. So, are you done?
Yes, I left it a little longer than I would have liked to, probably, but yeah, I did finish up this weekend, and you know what? It's always less painful than you think it's going to be. It's one of those things that you just kind of put off and put off and put off, and really you should just get it done. But yes, it's out of the way, and you.
Well, I have no comment. Okay, so here's the truth. This is the kind every year it just hangs over me like this dark cloud, and it is one of those tasks that I put off. And you are right, Ethan, that if I just take the time to do it, it's far less painful than I think. And so yeah, we'll leave it at that. But I'm really glad we've got a couple of accountants today.
Yes, exactly. And hey, if you get some money back, that makes it all the more worth it.
Oh, totally. Okay, thanks so much, Ethan.
You're very welcome.
That is the CBC's Ethan Williams. Yeah, there are 2 types of people, right? There are those who filed their taxes a long time ago and have already spent their tax rebate. And then the rest of us. The personal tax deadline is tonight at midnight. And if that is causing you some stress, we are here to help. We have a couple of tax experts standing by to take your calls. So if you have questions about rebates, recent changes to how capital gains are taxed, or anything else tax related, call us right now, 1-800-716-2221, or email bluesky@cbc.ca. Our guests are very busy people, with the personal tax deadline being today, but they have made some time to join us in our Regina studio. So we've got Regan Exner, the regional managing partner with the accounting firm MNP. Regan, hello.
How are you?
I'm well, thanks. We've also got Owen Cott, a manager of tax services with the same company. And then last week, this is kind of funny, when we had a past Future 40 winner on the show, he told us that Owen, could help us make taxes interesting. So now here you are as a guest on Blue Sky. So we're going to take him up on that challenge. You ready for this, Owen?
Yeah, I think so. And thanks for having me. I mean, it's no small task to make taxes interesting, but we'll try our best.
You'll do it. And Regan, you're up for this too. Thanks so much for being here.
Yeah, no problem. Thanks for having us.
So I do want to get something out of the way because there are people out there who have not filed yet. And I have made it clear this is a no judgment space. But what would the 2 of you say to someone feeling that stress? They might be feeling judged. They might be feeling rushed. I mean, it's midnight tonight. And so, Owen, I'll start with you. How would you address those feelings?
Sure. Yeah, I think as you mentioned, I mean, it can be a scary thing, but I think once you get into it, it might not be as scary as you think. And I guess there's no real downfall to filing your taxes. There can really only be, or not only be, but there's likely going to be a benefit at the end to make it worth your time and energy and doing it on time. So,
Regan, what would you say to someone who's feeling that stress and maybe even feeling a bit of judgment that they don't have it all together?
Oh, I'd say don't be too hard on yourselves. Accountants themselves are some of the worst procrastinators, or maybe the best procrastinators at not filing their own taxes. So I'm sure there's a number of them that will be filing them at midnight tonight once they have their clients' stuff all looked after. And I mean, it is an annual thing that, keeps coming and people will just naturally put off. But as Owen said, there can be a lot of upside, and most people who file a tax return actually have money coming back to them. So get it done, and you might be in for a good surprise.
Okay, so that's the incentive, and I'm glad that we just got that all out of the way. So let's talk about some more specific things. Owen, I am curious because you are still pretty new at this. What drew you to wanting to be a chartered accountant?
Yeah, I guess growing up, I knew I maybe liked numbers and was strong in them in math and sciences in school, and then I also figured I liked the business side of things, so accounting was an area where I could couple those two areas of interest, and it's worked out well so far. So,
Regan, what about you? What draws you to this?
Well, my dad was one of those accountants that filed his tax return at the last minute, so I guess, yeah, I come by it naturally, and figured it looked like a pretty good occupation and give it a try, and that was many years ago, and had a pretty good career since.
Okay, so you two are able to answer some questions. So I'll put out the numbers for folks. You can call us 1-800-716-2221. You can also email bluesky@cbc.ca. So you both mentioned like one of the incentives, obviously, is if you're going to get a return, you've got money that could be coming to you. So that's a reason to file your taxes on time. But Owen, why else? Why should people try to file their taxes on time?
Well, I guess if you end up owing money, if you file them late, there are penalties associated with that. It would be 5% of the balance you do owe, plus 1% per month on top of that, as well as interest at the prescribed rate, which is right now at 10% per year, which is quite a bit. And then there's also lots of different programs, the GST credit, child tax benefit, one-time things like the grocery rebate that are income tested. If you don't file an income tax return, the government doesn't know your income, and they may not give you those benefits, even if you did technically qualify. So even if you're going to not end up getting a refund or paying, still useful to file your taxes to be able to get those government benefits if you qualify.
Yeah. And Regan, do you see people falling behind and then missing out on some of those payments that do come either monthly or yearly, like the child tax one, that one comes monthly. So do you see people, though, who have struggled to catch up that are a few years behind?
Oh, absolutely, yeah. And it's a lot of times the people who need it the most that are the ones that do fall behind because it's a daunting, complicated task. And, maybe they don't want to, if they can't do it themselves, they don't want to spend the money maybe on an accountant to do it for them. So they will, kind of fall behind. And honestly, our tax system and our social benefit program is quite complicated, right? There's so many different incentives out there and rebates and refunds, and they're constantly changing. That is really hard for people to keep abreast of them. And to Owen's point, the best way to find out what you're entitled to is to file a tax return because Canada Revenue Agency is not just a collection agency; they're a transfer agency, so they will send out a lot of funds for people who need it the most, but they can't send it to you if you don't get them the information first.
Regan, why is it so hard? Why is it so complicated? I know we could probably do a whole other show about how our tax system is set up, and curious about how they do it in other countries. But why is it? Why does it seem so complicated, Regan?
You want my honest answer, I'm sure. Because it's political in nature partially, right? Because, we're trying to do the best for society and make sure we're getting funds to those who need it the most, whether it's, disabled or it's, elderly folks or anybody who's disadvantaged, or whether we're trying to incent people to do certain things, boost the economy, protect the environment, all those things. And like I said, a lot of that has to do with different political platforms and different governments that will introduce, like I said, various incentives appealing to their voter base or potential voter base, and that stuff changes constantly. So with that, you get a lot of complexity.
So, Owen, how do you help people deal with that complexity? Anyone who's feeling overwhelmed, how do you start, Owen?
I guess just sort of explain the basics of the system, and then also kind of try to explain those incentives that are at the end of the road for the inevitable time you're going to have to put in to do your taxes. And then, at the end of the day, also lots of individuals, their tax situation might be, I guess, less complex or scary than they might think. If you have, say, one job where you earn employment income, you might only have one slip. That slip needs to be filed. Lots of other things get put on there almost automatically, and then you are able to file your tax return and go ahead, I guess, under the rules. So.
But then there are those who have it a bit more, it's more complicated. Regan, people who are self-employed, who might have different contracts that they're doing. How much more complex can it get for folks?
Sky's the limit. That's where Owen and I would come in really, for certain taxpayers, like you said, who own businesses or have certain investments, might be citizens of other country. Anyway, they can have a whole variety of complexities in their tax situation that really requires professionals to make sure that they're paying the appropriate amount of tax, getting all the benefits that they should be. And, the Income Tax Act, I think it started in 1917, and it was 50 pages. I have no idea. Owen, what would we gather? It's 10,000 pages now?
Yeah,
right?
Or more.
Yeah.
Well, okay. Well, that kind of says it. Regan, how many years can you actually be behind on your taxes? I guess I mean, I guess it could be, there's no limit on how many years you can be behind. You might think, okay, a couple of years someone fell behind, but do you see cases that are worse than that?
Oh, absolutely. Yeah. Like CRA will usually identify you, right? If you haven't filed a tax return after a few years, you'll typically get a letter, and they'll ask you to file a tax return. It'll start as a polite letter, a reminder, and then eventually it'll get a little bit more aggressive to the point where they'll demand a tax return. If you refuse to file a tax return, they can actually just file one for you. So they'll just assess it based on the information they have, and so that can happen for people who just kind of put it off. Sometimes those are individuals, though, that might have other financial difficulties and might actually owe money to CRA, and they're trying to get in front of it or outrun it, but it's pretty hard to outrun CRA. Mm-hmm. You can go back and file up to 10 years of tax returns. So CRA, if you haven't filed returns and they haven't sent you letters and maybe you are entitled to refunds and other benefits, you can go back and file up to 10 years worth of tax returns, and they'll process those.
So if you do end up filing it, I'm going to use the family child benefit. If you were behind, then you file them, would you get money from years previous, or is that money just gone now?
Yeah, it really depends on the program. In most cases, they will give you some. They'll go back a certain period of time, but they won't go back for the entire amount. So they might go back 11 months. They might go back, each program is separate. But for the most part, you'll always get the income tax overpayment, so you get your refunds, but you may be precluded from getting some of the social benefits you should have gotten had you timely filed.
Oh, and what are some of the bigger changes or some of the things that people might be missing this year? Like there are always changes each year in terms of what you can claim or what you could get a rebate on. So what are some things that you want to flag to people, Owen, that they may not be aware of?
For sure, yeah. Two things that I guess actually changed that were taken out was one was the Saskatchewan home renovation tax credit. The last year for that was 2022. So if you did a home renovation, you could claim that up to a certain amount on your taxes as a credit. 2023, that's no longer available. So if you're thinking, I still have to file my taxes, do I need to get these receipts for the reno I did? No, you don't need to. The other thing is the expanded COVID home office deductions for employees working from home and other employees. Those are now not as expansive, I guess. So if you may be qualified before, you wouldn't necessarily longer qualify. So.
Okay, I'm going to share an email from Charlotte because I think this relates to that. Let me just read this here. So Charlotte says, my employer provides an automobile allowance and pays business fuel, insurance, and oil changes. I am responsible for any repairs. When I fill in the auto expenses part and include fuel costs, maintenance, insurance, etc., do I include what my employer has paid or only the personal part? It doesn't seem to specify. And what has been received is a taxable benefit. So thinking I should record it all? Regan, do you know the answer to that?
Well, great that's, yeah, there's a little bit to that. It depends on who owns the vehicle and what they report as taxable benefit on the T4 slip. Generally, and if there's a flat allowance or if it's all calculated on a per kilometer basis. But if everything has been shown on the T4 slip as a taxable benefit, so all amounts reimbursed for that vehicle, then you definitely want to report all of those as an expense, plus then whatever you paid out of pocket. And then you will claim the business portion of those expenses plus, depreciation or lease costs. So the first thing you need to determine is what's been included on your T4 slip to then find out, what you can deduct. Because, the good thing, the Income Tax Act is incredibly complicated, but a lot of it is based on common sense in that you can't deduct something you haven't paid for. And then, of course, you can't, you shouldn't have to include something in your taxable income that you didn't benefit from.
Right. Okay, so people like Charlotte can send us some questions. You could email them, bluesky@cbc.ca. You could also call our number, 1-800-716-2221. You can call us live and put your question directly to Owen and Regan. They are helpful, and the tax deadline is tonight. Now, if you are missing some of the show today, you will be able to go back and listen to this advice because we'll put it up on our YouTube channel. You just find it by going to the CBC Saskatchewan YouTube page. We also post our episodes on CBC Listen, so you just search for Blue Sky on that one. We've got a couple of people with us helping us through this. So Regan Exner, regional managing partner with the accounting firm MNP, and Owen Cott is a manager of tax services with the same company. Owen, I'm curious your thoughts on how well a lot of young people are doing when it comes to understanding their taxes and just overall their financial literacy. How do you think most young people are doing these days, Owen?
Yeah, I think there's a big variance, and it might depend on what you've taken in school or that sort of thing. But I think one common theme is you can get through the mandatory school in our province, and there might not be a lot of mandated financial literacy education. So I think on average, probably people maybe don't know as much as they might need to, or actually want to know, I guess. And then the thing is, there's two things that are certain in life: death and taxes. And so everyone has to file a tax return or work with taxes. So it's probably some an area that people maybe want to know more, but I think that especially younger people who haven't had to experience it as much, or maybe their parents have done it and then all of a sudden one year they're on their own, they probably maybe don't know as much as they want to know. So,
Regan, how do people go about gaining these skills if they didn't learn at school or at home?
School of hard knocks a little bit. Probably attempted their own tax return, had maybe filed it and CRA changed some things. When they received the return back, they've talked to other people and found out that somebody was claiming something or was entitled to some benefit that they were, didn't realize. So then, they'll go back and fix that. So because it is tough. Everybody's situation is completely unique, right? And like I said, it is complicated. There's a lot of stuff out there. So, if they don't engage a professional and they're trying to do it themselves, for a lot of people, that's fine. Like if they have really basic situations, they'll get the right answer. But they do need to like I said, kind of constantly be aware of things that are changing.
We got a question here from our YouTube page because we're streaming live on YouTube too today. So Kathy asks, can you talk about corporate taxes for small businesses, some pointers and tips for someone starting off new? Owen, do you want to take that one?
Sure. Yeah. I guess if you're running a business, and whether it's a sole proprietor or you are truly incorporated, there's, I guess, it comes down to revenue and expense, and then you get a net income line at the end that's taxed. So the threshold for expensing something is whether it's to gain or produce income. So if you're spending money that you could reasonably attribute to is earning you income for your company, you can use that as a write-off. So for example, if you use an area in your house for a home office, you can, and that's a dedicated space for home office, you could prorate the square footage and write off the utilities and mortgage interest and stuff on your taxes to lower the net income and potentially lower your taxes. And the corporate tax rules are quite complicated. So I would suggest definitely if you are in that realm, definitely the advice of a professional and a CPA is worth the time, and then also will come with some savings at the end of the day as well in terms of things they can identify for you. So. Yeah,
because professionals, you do know the ins and outs of taxes and are often able to help people find more places where they can save or get money back. Regan, what are some of the most common ways people can get more money back?
Well, it depends the type of taxpayer, right? So if you're an individual, if you're a business, there's a lot of different incentives out there. Like the government is trying to stimulate different areas of the economy, whether it's technology or whether it's manufacturing and processing, different things like that. So, there's scientific research and experimental development. So it's things that, like I said, are trying to stimulate certain areas of the economy that the government is trying to promote. So they will put dollars there. And, you can basically capture your share of them if you conduct those activities.
So we did get someone calling in, Corey, who wanted to ask, why do we have to file taxes when the government already knows what we owe? Owen, do you want to tackle that?
Well, I guess they might not actually know what you owe. For example, something like a medical expense credit or a donation, they don't necessarily keep track of you making those. So you can file your taxes, include those. Those are a credit on your tax return. And maybe you say, oh, $1,000, then their calculation, but you made $1,000 donations, had $1,000 of eligible medical expenses to have a credit, and that may actually push you into a refund position. So they have a certain number in their head, but they don't know everything that you've done. So you're basically filing your tax return to A, confirm what you've done that they understand, but B, also add in usually positive things for yourself that will end up pushing you in the right direction. So
yeah, the follow-up question to that would be can the government do basic ones without people filing? Like the CRA can actually do basic taxes without you filing, correct? It's just that if when you file, you're able to claim more, right?
For sure, yeah. It's an interesting system. They actually, given they generate the slips and give them to you, they actually have lots of the information. So I think if there was a circumstance where people didn't have anything extra except for what the CRA had, they definitely could go ahead and file your taxes without your input, and that's without knowing their exact processes and procedures, something that could be done and might be looked at in the future. So,
What else should be on people's radar? So, Owen, you mentioned, being able to claim donations, medical expenses. I'm curious about childcare, where we're at. Obviously there's been a deduction with the federal plan, but people are still paying a couple $100 a month. And so, what other things should we be thinking about, Regan?
Oh, it's a long list. Yeah. So, I mean, the lower your income, generally, the more access you have to a number of credits. So it's even whether it's like sports activities. And remember, there's federal and provincial ones too. So they both have their own incentives. They're not always aligned. Anything where, like I said, you're slightly disadvantaged. So you have an exceptional amount of medical expenses, or you have a disability, or you're having to renovate your home to make it more accessible, or you're renovating your house because your elderly parent is going to live in a part of it. Though anything like that where you're having to, in some cases, maybe spend money where it because of an unfortunate situation. Like I said, don't be surprised if there's like I said, a tax benefit there somewhere.
I want to ask you quickly about something else on the radar just before we get to a few more listener questions. So what can you tell us about the changes to how capital gains are taxed? Owen, I'll start with you.
For sure. So I guess I'll quickly start by explaining what a capital gain is. So if you buy something for, say, $1,000, hold it for a period of time and sell it for $2,000, whether that's an investment or a property or something like that. If you sold it for $2,000, bought it for $1,000, you have a gain of $1,000. So that would be considered a capital gain. Previously, capital gains were only taxed at, 50% of a capital gain was included in your income. The inclusion rate was 50%. The government just announced that they're, as of June 25th, 2024, increasing that inclusion rate to 2/3. The one caveat being for individuals, you have an annual, exemption at 50% of $250,000. So your first $250,000 of capital gains are included at 50%. Anything over above that is 2/3. But corporations and trusts are automatically already at 2/3 on their first dollar of capital gain.
So you're counting it as income, which you have to claim then when you go to file your taxes. If you sold that secondary property, you're claiming that as income on the next time you file.
Exactly. With the exemption, the principal residence exemption is still there. So if it was the home that you occupied and you've only owned one property, you sell that, it's exempt under the principal residence exemption. But if you, say, had a home, you sold your family cottage, if the gain is more than $250,000, any amounts over that $250,000 will be included in your income at a 2/3 rate, not a 50% rate.
Okay, let's get through some of these listener emails. So Bridget writes, regarding tax filing for a self-employed person, paying employee and employer portions. This year, comparatively with previous years, that payment has been proportionally higher compared to income of previous years. Is there a reason for this, or is it that we may have calculated wrongly? Regan?
I think what they're asking there is just the employer share of like Canada Pension Plan premiums, employment insurance, and though there has been increases to definitely the CPP rates. I think the EI rates have been staying somewhat consistent, but you would notice that for sure. The government has been trying to increase the retirement benefits and shoring up the plan. So by doing that, they need to collect more from employers and employees, and you're just you're noticing that now.
Okay, Kevin writes, if the employer pays term life insurance premiums on behalf of the employee and lists it as a taxable benefit, is the employee able to claim the taxable benefit on their return? Owen?
No, they are not.
Simple answer. That's it. Okay, let's go to another question. So Jay asks, what are the pros and cons? RRSP versus TFSA. Regan, you can take that one.
Sure. Well, they're both great plans, right? Because the investment earnings inside those plans are not taxed. In a TFSA, they're never taxed. In an RRSP, they're taxed when you withdraw them. It a lot of times will depend on your taxable situation. So if you're a higher income earner, maybe you lean a little bit more to the RRSPs. Potentially, if you're a lower income earner, it might be the TFSA.
And just explain that a bit
Sure.
further. Why would a lower income person? It's because you're not taxed when you take it out, right? But maybe just elaborate.
Yeah. So with the well, I'll start with an RRSP. When you make a contribution to an RRSP, you get to deduct it on your tax return, or whenever you choose to deduct it on your tax return, you can carry it forward. So it'll reduce your taxes, and theoretically you get a refund. When you withdraw the funds, hopefully in retirement, you will pay tax at that point on the contributions you're pulling out, plus all the accumulated investment earnings in there. Mm-hmm. So it is, you get a break up front, and then you get to defer the tax, and then you'll you'll pay it when you withdraw it. If you don't withdraw it on your passing, between yourself and or if you leave a surviving spouse, at some point the government gets the tax. The full amounts are deemed to be withdrawn. A TFSA, a tax-free savings account, you don't get a deduction when you put the funds in there. So you can put up to, I think it's $6,500 a year now. So there's no deduction when you put the funds in there. The funds are not taxed as you earn investment income. And then when you withdraw the funds, whenever, could be in retirement, you do not pay tax. So for
and
someone...
you could potentially withdraw it sooner.
Correct.
Right? And then you're not taxed on it.
Yeah. So for somebody who's maybe, like I said, potentially a lower income earner, sometimes that's more beneficial, the TFSA, because of the fact that maybe the tax break up front isn't as significant because they're in a really low tax bracket. And when they withdraw the funds, it's not going to show up on their tax return coming out of a TFSA, and it's not going to impact certain things like the guaranteed income supplement or other income-tested benefits that they could get as a senior. So, it really just depends. But, yeah, as we were talking about some of the benefits you get by filing a tax return, well, remember, all those benefits are usually tied to your income. So the higher your income, the less benefits you get. So you do have to be careful sometimes. RRSPs down the road could, like I said, impact some of the social programs you're entitled to.
So for a young person who maybe has a little bit of extra money and they're trying to decide between an RRSP and a TFSA, I know it's hard to give general advice, but just give us a scenario. Which is better for who?
Well, I'll add to that because now, what is it? The first home buyer savings account. So the government has also introduced a new plan, a third one for those young people that are trying to save for a home, where they can make a contribution of up to $8,000 after the age of 18. It's tax deductible. That contribution, the earnings on it are exempt from tax, and then they can withdraw the funds and not pay tax as long as they use it to buy their first home. So that's brand new for 2023. That's a pretty attractive one for young folks who are looking to save for a house. So that would be my first choice out of those three.
Okay. You both have been very helpful. Tax season is a stressful time for a lot of folks, and I feel like you really helped us out. So I'd like to thank you for your time. I would say that springtime, there's a couple of things that stress people out. Taxes, perhaps the other one, potholes. We've been spending a lot of time talking about potholes too, and I thought we could just have a bit of fun with this because CAA announced its worst roads list. Just came out. Moosomin claims the top spot because of potholes. Moose Jaw, there's a road there that appears to be number 4 on the list because of potholes. So before we let you go, we've talked a lot about taxes. Do either of you, Regan or Owen, want to complain about potholes before we wrap up today?
I mean, if only there was a tax credit for vehicle repairs from hitting potholes. So we'd be probably leading that in the country. So.
You probably would. Well, again, thanks, you guys. This has been really great. Regan, I appreciate your time.
Thank you.
And Owen, thanks to you too.
Yeah, thanks for having us.
That's Regan Exner and Owen Cott. They both work for the accounting firm MNP. If you missed some of the show and you are hoping for some advice, you can find this episode on our YouTube channel. It's youtube.com/CBCSask, or the audio of it on CBC Listen. You just search for Blue Sky. Now, a few other things I want to plug. Why are we talking about potholes? Because our podcast that's out today, Good Questions Saskatchewan, tackles potholes, and it's fun. We learn about the Python 5000, which is this really expensive, really big machine that was invented in Saskatchewan, but not used to fix potholes in Saskatchewan. So if that makes you curious, I suggest you head to CBC Listen or your favorite podcast app and download Good Questions Saskatchewan. Now, tomorrow we've got a difficult topic. We've been hearing about changes to BC and how they deal with drug use in public. And so tomorrow we'll talk to people who work on the front lines of addiction in Regina and Saskatoon. And we'll also hear from the Prince Albert Police Chief, reflecting on the changes in BC and what's happening here in Saskatchewan. So that's between 12 and 1 right here on CBC Radio 1. Have a great afternoon.